Now, in the last 18 months, three Ghanaian banks have been taken over by administrators to save them from imminent collapse. The central bank said they were persistently suffering cash shortfalls, which means they regularly fall below their cash reserve requirements. And placing banks in distress under administration prevents losses to banks' customers. Those are the depositors and other creditors. And it's also aimed at insulating the wider financial system from further risks. Well, Ghana has a total of about 36 banks, including 17 that are wholly Ghanaian. And it's some of the local banks that have struggled to maintain the minimum of $91 million required by the central bank. So is a measure putting foreign banks with more operating capital at an advantage over homegrown banks? Well, to discuss this, I'm joined by John Awuah, who's Managing Director of Ghanaian Bank UMB. Evening to you.
Good evening.
And thanks very much for joining us here in Focus on Africa. Is this a worry for you? Do you feel that the current central bank legislation, which required this base minimum, which I believe has tripled from what you were asked to pay before, do you think that's putting you at a disadvantage?
I wouldn't put it that way. I think the approach the central bank has taken is rather to help improve the strength and health of banks in the country. As you mentioned, we have now about 32 banks in the country, and with 400 million capital, obviously, as a developing country, you want banks with the right capital levels to help fund the economic agenda.
And that's 400 million cedis, which is
that is correct, about 400 million Ghana cedis, yes. So to quote the regulator, who is the man who sees all the numbers, in spite of all the challenges that we've had in the last few months, the industry is still resilient. Capital levels are at the right places. The industry is profitable and liquidity is strong. So yes, there have been a few blips here and there, but the market remains very robust and resilient.
Now, there's a different song which is being sung by some other Ghanaian bankers or some within the banking sector who say, look, at the moment, we're really suffering because there's competition from abroad. There are a number of Nigerian banks, for instance, which have been operating for a while, which maybe have a more competitive advantage. And it therefore puts us in a bad position. What would you say to them? Because they're your peers.
Yes, we talk about the Nigerian banks because we recognize that they have the right capital levels, they have the right size, and that is helping them to reach out to other countries. I think as indigenous banks, yes, we recognize the fact that we play critical role in the key sectors, the productive sectors of the economy. One other thing from the regulatory perspective is the fact that we do not just need local banks and indigenous banks. We need healthier and stronger indigenous and local banks. And I'm sure we all coming to the same table to make sure the banks are properly capitalized.
Well, you're coming to the same table, but maybe you're not offering the same thing. So let me ask you, if I may, Mr. Awuah, what kind of bank do you operate? You know, how big is your bank? How many customers, for instance?
Yeah, we are a top tier 2 bank, and we are fully indigenous and local. We are proud of our legacy of 46 years doing this business. And we want to remain indigenous. So in our capital raising efforts, there is strong emphasis on ensuring that the Ghanaian ownership is not diluted to levels where we become known as another foreign bank. So we are very much on the same page with the regulator in terms of capacitizing the financial environment, making sure that we have banks that have the ammunition and strength and power to help propel the economic agenda. There's a lot of talk on infrastructural development.
And you're touching on a word when you talk about infrastructural development and the word power that you use, that kind of triggers something, because there are many people who say, but there are a number of our Ghanaian banks, indigenous banks, who are tied into, after lending money, for instance, to to help over the recent power crisis, and that they lent money to the Ghana's power company, and that in a way has tied these banks because some of this money is not being paid back.
Yeah, that's correct. And there's an ongoing debate as to how we can work with the government to ensure that those of us, the indigenous banks, local banks, and even extending to all the other players in the market, when we fund government projects, that we are paid right on time. As a highly regulated institution or an industry, there are limits to what we can do. And where your counterparty is not pulling the weight, then you can find yourself into a charted path, into areas where for no reason, for no apparent problems from your side, your bank could be seen to be having some trouble.
And very briefly, what would you say to Ghanaian customers? Should they be worried about what's happening? Should they be worried about their money?
I think what the regulator has done is to restore market confidence and say that where we see areas that needs assistance and intervention, be rest assured we will come in to ensure that the depositors are protected. Indigenous banks are strong banks, and we want customers to run with us.
Mr. John Awuah, Managing Director of Ghanaian Bank UMB, thank you very much
Most
for joining
welcome.
us.
Thank you.